Hello ladies and gentlemen and welcome. Welcome to this week's podcast with me, Russell, and to my left,
Chris Pollock. How you doing?
I'm not too bad. How are you, Chris?
Yeah, fair enough. Okay, I had a busy week or two, so still could do with another weekend to get through the last one.
I had a very chilled weekend this week, so I'm exactly the opposite. I'm super relaxed and ready to face the week ahead.
Well, maybe we can talk about where my trading plan for the day towards the end of this. I tend to be a little bit more coy on a day when I've slept so badly. So
okay, fair enough.
Yeah, we'll see how we get on with that. But there's a few bits to get into, isn't there? We've seen some slight progress in the US on this government shutdown, the longest ever government shutdown, superseded by Trump's previous longest ever government shutdown back in 2018-19. So
I think that it might be looming to an end.
Well, should we have a look? I mean, we've got a few interesting things that are coming our way as I say goodbye to Russell briefly. Yeah, with 40 days of deadlock. Maybe let's have a look at the charts actually to show you what the S&P looks like over the last 40 days or so. You know, people think about government shutdowns. That can't be good news for the stock market. Well, I mean, it takes a lot for it to be bad news for the stock markets. Where do we take it through to? Kind of September, was it in here? We saw like effectively a pretty nice move again during this government shutdown.
Yep.
Tends to not the last sample size. I think of the last 5 shutdowns have all led to from shutdown to reopening stock markets higher. This one appears to be no different, assuming that we are getting the reopening coming. And maybe let's talk about why that might be happening. So we had some decent progress over the weekend. Republicans have had to get some of the Democrats on side, and that's been difficult. They've been making promises around having a vote on this spending bill, but many of the Democrats don't want the government to reopen until this deal is made. But a few of them are now starting, I think 8 members now are starting to take on the reality that this government shutdown is taking too long, and that maybe we'll just be happy to reopen things with the proviso that we get a vote on this in December.
Well, I think Trump's been making promises, and you know how everyone super trusts what Trump says nowadays, you know?
Well, I would be looking for something written in blood, or maybe some sort of repercussions if this vote doesn't go ahead, because you know, it wouldn't be a surprise to me to see the government reopen and then this vote not happen.
Exactly that.
So yeah, who knows how they're getting into these Democrats? And I think it's causing a bit of division in the Democrats anyway. Not a party that's you know, swinging from the fences in terms of its successes at the moment, right? It seems to be in a bit of the doldrums these days, and this could easily just put a division between the 8 or more maybe that are going to now vote to get this government reopened, versus the more staunch, we need the deal done before the reopening occurs. It seems like a bit of a negating of bargaining power to me. I'm no negotiator, but if you allow it to just crack on as was, your kind of leverage seems to have been discounted somewhat. But hey, I'm not a politician. Maybe they're getting their backs scratched somewhere else. Who knows? I wouldn't like to say too more than that.
Well, there is a meeting today at 4, so we might be able to sort of get some sort of clarity if anything's released after that meeting. Or,
yep, the Senate's expected to return again from 4 o'clock UK time. I'm not sure how long these debates will last, but we might have something before the close today. Or yeah, you certainly think that some sort of feedback from it.
I mean, you're definitely looking at a rally if it's positive news, right?
Well, I mean, I guess it's liquidity coming back into the system, right? People are no longer getting paid. And therefore, if that was to continue further, then that's a lot of risk to people with mortgages and other financial obligations. So if you can stop that problem, granted it's not an addition of liquidity, it's just the liquidity we used to have coming back, but it's a marginal gain from where we are currently. And maybe this is why we're seeing a lot of green across the screens. Look at in the UK we're up a little bit, but gold's up. Well, it was up over $100 today. Best day in quite some time, right? We've not seen $100 up days for a little while, so maybe this is getting back on its perch. I remember we talked about this last week when we had this 5.5% decline. Every single time we've seen a move so aggressively down on gold, within 2 months it has been higher than the start of that decline. So
yeah, I mean,
it's finding its footing.
Definitely been a correction on most across the board. I've heard people crying it's the end of the cycle, and maybe they've been calling out too early.
Well, hopefully we were on this last week as well, right? We were talked about these sell-offs that were coming in on the deltas. We were getting a huge amount of new additional sellers coming into the market, and they weren't able to take out the penultimate or the previous lows. Yeah. This is kind of known as absorption in the CVD world, cumulative volume delta world. What that truly means is that people are clicking the sell button, but someone who's sat as a liquidity on the other side, getting on the other side of that trade. So typically this is large liquidity, large institutions. Have to be. I sit in liquidity as well, and I'm not a whale. But generally speaking, en masse, these are large institutions and how they get into the market. They allow point and click traders to start hitting the sell button. They sit there just saying, yep, sell to me, I'll buy, sell to me, I'll buy, sell to me, I'll buy.
Their stop orders there.
Lo and behold, after that low that we had in the middle of last week, we're up pretty meaningfully, right? 39.30s up to best part $200 up from there now. So it has started to move higher. I know there's some pretty empty volume profiles here. Haven't seen them this morning, but I'm pretty sure it was about 4,200 was the quarterly value area high.
Okay.
If we go take it, certainly you'd expect a bit of liquidity opt out of this and go and test the big sell-off that came. But to me, it's starting to find its footing here. I'm getting pretty bullish on gold again.
Fair enough. So yeah, so I mean, maybe we should move our attentions to the UK now and the impending decision rate for the interest.
Well, last week was the rate decision, so we're not getting it for a few more weeks, but it was quite an interesting one last Thursday. This was in a world without US data. It's quite nice to get something meaningful.
Yep.
We had a few actually. The employment rate out of Canada was really impressive as well. But the UK rate decision was interesting. We kind of mentioned as well. We were thinking that 4%. If the economists think we're going to get a 4% decision, well, typically they're right. It's very rare that you get these economists getting this wrong. But they were very close to being wrong on this occasion. We were expecting, on the way that this is cast, you've got the number of voters, 0 voted for a hike. Or sorry, were expected to vote for a hike. 3 were expected to vote for a cut. 6 for the pause. In reality, we had 4 voting for a cut and only 5 voting for a pause. So it was literally on the margins that we didn't get that 3.75 decision. Which probably opens the door a little bit wider for it to happen next time, especially given the trajectory. We always kind of hark back to this, but it had been cut, pause, cut, pause, cut, pause, cut, pause, cut, pause, and now another pause, right, as of last Thursday. So maybe they're just going to slow down this trajectory somewhat. Well, they certainly have already slowed down that trajectory. But what's going to be interesting this week in a calendar light on US news, at least for now, is the UK equivalent to the non-farm payrolls, right? I mean, this is actually measuring the jobless rate, but we get the average earnings and we get the unemployment rate as we do with the US employment report. This could be a pretty big week, I think, for the UK in terms of whether we get more likely or less likely to get that rate cut next time out. If these jobs, the jobless claims numbers are high again, or the unemployment rate creeps up, then that's kind of probably increased those chances. We also have GDP figures out in the UK on Thursday, along with the RAFTA data we get with that construction, industrial production, manufacturing data, etc. So I think this week we'll get a pretty good take on whether that rate cut is going to happen in December or not. Yeah, feels like Rachel Reeves might like this. We've got a budget, of course, in the UK coming up towards the last week of this month.
Her speech about the budget done something to the FTSE, didn't it? That morning, it was quite a significant drop on the FTSE.
Yeah, FTSE. I mean, it's hanging in pretty well compared to the US stocks. If you look at it from the US stocks, are obviously down pretty meaningfully since the end of October. FTSE's kind of hanging in there. Really, we've sold off and come back, sold off, come back. Almost like a cup and handle sort of formation, or a inverse head and shoulders for a breakout. But there's quite a few equal highs here, so that if you like kind of breakout trading, this might be a level that you have in mind. These 2 equal highs. There's plenty going on with the UK at the moment. So in a world of no data out of the US, at least there is some life in this market. Posting near all-time highs.
Do you regularly trade the FTSE or? No. Okay.
No. I've traded month end, month beginning, and then a bit of earnings. That's it. There's not a lot of data. The way that I trade with the order flow and with the volume profiles, it's difficult to get. You have to buy the stuff from ICE. There's not a lot of volume in the stuff that I see, so don't use my normal methodologies for this market. It's just the kind of easy trades, like the flows that you get at the beginning and end of the month. Quite like those. And then the earnings, you don't want to turn your nose at a big earnings release in the FTSE, because the likes of AstraZeneca and Shell, such big components that can move the market quite a lot.
Exactly that.
Apart from that, I'll leave it well alone.
Yeah, I mean, so talking about Shell, I mean, how is oil doing at the moment? Oil was starting to recover. Due to them talking about they're definitely now going to cut production in January. It's been so OPEC have said. So we're just hoping maybe. Well, I mean,
it's off the floor. Is it a dead cat bounce? I mean, it's not exactly following through yet. I mean, there is a bit of a gap still to close here, so maybe they've got their eye on that. These kind of equalish lows didn't get taken, so maybe there's some final bullish liquidity that can be swept out of this market if we can get some more bad news into it. I'm super bullish oil medium term, like long term. I think 2-3 years from now, I think this market can do really, really well. Often gold is a precursor to oil rallies. You often see gold doing a big move, and then a year or 2 later,
well, production's going to be down from January. So supply and demand, as long as maybe demand comes in, then hopefully we could see a rally on oil.
Yeah, and as we mentioned last time, the AI demand is one that's kind of in the post, right? There's not enough energy out there to kind of meet the requirements that are expected to be needed for AI.
Well,
So where they're going to plug that?
well, you say that, but China seems to have all the energy ready. So yeah, so
That
there's
nice clean energy, is it?
what do you think? No, it's not. It's probably coal and stuff. So yeah, so at the moment there's this thing being bandied about the AI arms race, so to speak. China's not able to be getting the best chips and stuff. So China have been working on different technologies, and they've got this Hawaii chip that they can cluster together, so they can have multiple chips, like doing the computing power of like a main chip. So that they are saying now that they're in a very strong position to start taking over this kind of AI arms race. It's not just that; it's that they're working on processes to make the computing power like less needed as well. But on top of that, look, you can see quite clearly here that China have cheap energy. And the reason they have cheap energy is because they still have like loads of coal. So they didn't use all their coal like most other countries did.
The Industrial Revolution.
Yeah. So basically, what happened in China? There's a big river, and to get the coal from where it was, you'd had to bring it down the river. But as you go down the river, it turns into rapids, which is literally where the saying between a rock and a hard place, because it forces the river in. So there was no way to actually use it for the river. Now, most other countries, when they face problems like the Industrial Revolution in England, we invented the steam engine to pump water out of the mines. That's what the steam engine was actually built for. The Chinese were still at war with their dynasty, so their greatest minds went to warmongering, not to solving these problems, which is then hence why Chinese food is always quick cooked, stir fried, because it was just burnt with wood. Because they obviously have a lot of wood, so they just burnt a lot of wood until that run out. So that's just left them with like so much coal that they can just keep burning that for years. Hence why they've such cheap energy. I don't think that they're going to be looking into much renewable sources. I mean, if you've ever been to China and tried to breathe the air, I mean, you'd know straight away that they're not into clean energy.
Yeah.
And I think also as well they have a lot of nuclear. A lot of nuclear power is going to be started to develop in China because they're going to have probably less regulations, and also as well with these new smaller micro nuclear power plants. Have you been hearing about those?
Yeah.
Like self-contained small ones. So talking about that in America, to start like actually running these AI kind of stations because of the sheer power that's needed. But yeah, I mean, this could be worrying for America and for the arms race, because let's be honest, as a client, somebody who needs to use AI, you're not going to be loyal to the country, are you? You're just going to go where it's cheaper, right?
Well, we are famous in the UK for doing business and buying things from every which where in the world, right?
Exactly,
we don't
right.
really care.
Yeah.
We will buy cars from Germany. We'll buy TVs from South Korea. Whatever's cheapest, we will do.
No, exactly
famously.
that. So I don't know what this means actually for the AI arms race, but it could be another nail in the coffin for all this tariff.
Yeah, well, I guess the whole move in the NASDAQ has been AI driven, right? We talked about
Exactly
the AI
that,
bubble.
yeah.
I mean, there is some nice charts up. I should have brought them up, which show that we are way away from the peak of the kind of equivalent moves that we saw in the .com bubble. But that's not to say we aren't already in bubble territory.
Yep.
And if there is going to be an alternative that is done more cheaply, more efficiently, maybe, I mean, the chips are better in the US, but we're already hearing in the last few weeks that they're not going to be able to power them. So if these guys are using slightly inferior chips, but making these clusters to get them closer to where it needs to be, but they have the energy, well, maybe that's where it'll go.
Well, I think the main thing as well is China is always being massive innovators. So if they can get to the same place without using so much computing power, then really this not just is a business model just for China. It could be a business model for the whole world because it would actually just completely bring down the power that's needed as well.
And they've got this. China have got this kind of like these series of 5-year plans, right? I think they're on their 15th 5-year plan.
Yep.
And it's what 2026 to 2030. And I think we're going to find out more about what that is.
Okay.
Soon. So before the end of the year, we'll have some clarity. I wonder if the AI story will be in there. This energy push will be in there.
Okay.
They've obviously gone from an industrial country. They probably want to move to a slightly more developed country at some stage in the next 20 years.
Well, I mean, they are going to have to do something because the Chinese economy is actually declining as well. It hasn't sort of like recovered as much as it should have after COVID. So I know that everyone's saying, oh, they're going to be the next super race and stuff like that. But if you actually look at their economy numbers, it doesn't seem that they're faring any better than any other country in the world.
But the demographics are good, right? 1 in 5 people is Chinese, right? So the numbers are there for a decent GDP number. If you fast forward 100 years, I'd be surprised if they weren't ahead of the US. But where is that tipping point, right?
Yeah.
But the scale of it is astronomical. So yeah, maybe it'll come. Maybe not in the next 5 years, but yeah, they're on their way. Maybe we should all go to learn Mandarin.
Maybe. It's not the easiest to learn.
Yeah.
I've heard.
But yeah, apart from that, not too much else to go on. I mean, there is kind of tentative inflation numbers. I'm not sure that how long it's going to take for them to get the numbers in. If the government does miraculously get reopened this afternoon, tomorrow, whenever it might be, if that's going to be enough time to get CPI data out accurately, we shall see. Keep around that Thursday. Apart from that, not too much going on. Again, all this US data very in the balance as to whether we're going to get it. And without it, it's really UK data or nothing in terms of news this week. So all eyes on the government shutdown.
Yeah, well, I think, that's probably it from us, right?
Cool. Like the little history of China in there. I love that one.
Been a very, very noisy trading floor today, player refreshed in the background. So, yeah, cool. Well, I mean, let's hope the government shutdown finishes and we can start receiving data, and then hopefully also the government can really focus on where the interest rate's actually going to go, because at the moment it seems like they're just making decisions for making decisions sake.
That's what some of the central bankers were saying. Like, how can we make a rate cut in December if we don't have a government with any economic data when we're data dependent? So you can see that perspective, but they made a cut without data last time. Feel like they don't want to surprise the markets, but it's still 60-40 split on whether we get the pause or the cut. So it's still in the balance. With data, that will clear up, no doubt.
Okay then, well, thank you very much, Chris, for your time today, and
made it through
until next Monday, and we might have too much to talk about.
Oh, the government could be back. All right.
Okay, cool. Well, from me, Russell.
And me, Chris.
Thank you very much, and have a good week.